Alright, hello everyone, and welcome back to Daily Update, my 1000 days challenge. This is day 910, so let's get things started. So looking at the daily chart itself, we definitely do see in terms of a bullish kind of a break towards the upside, even for the S&P 500 itself. We have a very decent consolidation over here, but it's a little bit choppy. But bear in mind, right now, we're definitely showing signs of strength because we've increased crossing these 200 exponential and simple moving average on the daily chart. In addition to that, we also have the 200 exponential moving average relatively flat, which goes to show that there has been a slowdown in terms of the sell-off pressure-wise, and then the bearish trend is actually reducing in that sense. So generally, when this tends to happen, when the long-term kind of moving averages turns towards flatlining and then price start to crisscrossing, that is a very clear sign that the strength of the trend has already reduced tremendously, and that there is a potential sign that a reversal is in the works on the coming in that sense. All right, so there's something to take note of, but bear in mind we could still see short-term pullback, but overall there's a very nice chance that we can very nice decent break above that and a continuation towards the upside. And then if you look similarly on Nasdaq wise, we see similar price action. You see the fact that we are retesting this 200 exponential and 200 simple moving average, this confluence region itself. And in addition to that, there's also this horizontal resistance itself, this confluence of resistances. And yet, even after the first day of rejection, which is yesterday itself, we are actually hovering near above it. So even though there could be short-term pullback, I still do think that we're very much likely to break in the midterm, which in the next coming month itself, that we may have a very potential nice strong break towards the upside, simply because we have been accumulating over here very nicely itself. So overall, technically speaking, on the chart wise, both S&P 500 and Nasdaq looks to be relatively strong. And over if you're looking at ASHR wise on the China equity market, I do think there is actually heavily overdue for healthy pullback, simply because it's a confluence of resistance zone itself. And in addition to that, we have climbed quite parabolic since the 22nd of December, right before Christmas. We've been climbing up almost day after day, day after day, day after day. So there hasn't been a healthy pullback, and volume-wise isn't exactly picking up as well. And even for the sell-off pressure, you see the volume has been very clearly dwindling, even though price is moving towards the upside. So these are very clear signs that we are reaching near a short-term exhaustion phase, and then you'll be much more healthier to have a clearer pullback, especially for sellers to take in the profit in that sense. So similarly over for here, you can see that over here there's a spike in terms of the volume, there's very much of a third wave. And then over here on this very fifth wave itself, you can see a declining volume as price continue to go towards the upside. So I do think that short term wise, we could see a very decent pullback upcoming. So I'll be very cautious to add in any new position right now if you're looking for a long-term trade. But short-term trade wise, then things could still be towards the bullish side of things. And then finally for Bitcoin itself, similarly, same thing. We've been climbing over here, and to me here is a very distinctively clear signs of a peak wave, elliott wave, simply because of the fact that even though we're climbing higher, both in terms of price action wise and in terms of volume wise is dwindling. So these are very clear signs that there has been a reduce in terms of momentum wise. So on the 4-hour chart, you can see that we could potentially still have one last extended wave, but I would want this to retest this 50 simple moving average on the 4-hour chart, show a false break setup, then I'll be willing to put a buy stop order right above the swing high over here. To me, this is actually such a noise itself. So we do break that, we do fulfill the criteria where we break down, close up, and then break above, that's where I'll enter long setup, as what I've shown earlier. So something like this. The tight stop loss could be even as tight as here, and then I'll be willing to enter a risk to reward somewhere along here itself. So I'll be looking to take profit quickly, at least half the position size, and then move the stop loss to break even, and then I'll be trading very tightly along with it. And yeah, with that said, I've come to the end of today. If you guys have any questions, feel free to provide your comments below, or I'll see you guys tomorrow. Take care. Bye-bye.